Hello Wolfpack, got the headset on today, there's some roadworks going on, so I'm just trying to distract myself from that noise by having the ambient sound here, but essentially straight into Bitcoin today. And what we have really, is the weekly close, the monthly close, and fresh little daily candle close from the bottom of that wedge. So, interesting stuff how we're actually forming that wedge in the first place. This was a bear flag formation contrasting to May to July, which is a bullish descending wedge channel formation. This was an ascending channel formation, okay? It's broken to the downside, and now we've come down and we're actually testing, or we have tested almost, that uptrending dotted level of support that we said we were going to go to. And now, since we've formed this descending wedge just seemingly out of nowhere, we could really be seeing one more swing to the upside. It's possible. I'm not going to make any predictions as to whether that's going to happen or not, because honestly, it doesn't matter to me. It doesn't matter to my long-term prediction. But if we're looking at the RSI, for example, we can see that is a bullish divergence on the RSI, pretty clear, slight bullish divergence. And we also have a MACD cross that's, could be happening within the next couple of days as well. And so it wouldn't necessarily surprise me if we do see one more swing. If we do see that swing, where would it take us? If we take a measured move from the wedge, all we need to do is apply that to the breakout point. Okay, so let's assume we break out, down here, right? We can go all the way up to 45k according to that breakout from the measured move. However, I would argue if we do go upwards, we won't be passing 42.5k. Why is that? Because the Gaussian channel, Ichimoku cloud, 50 SMA, Bollinger Band center line, bull market support band, and the 75 SMA are all in the region at around 42.5k, right? So again, I think that it is possible we can go up here. It's definitely a possibility. However, if we do, I don't think we'll be passing 42.5k. I think there's too much resistance to get past that zone. In fact, we could be in a very bearish scenario in which we go upwards, reject from the top of the wedge, right, the bottom of the channel, and then see a resistance support flip and then come downwards again. That could be actually ultra bearish. In fact, that would be more bearish than if we just dropped down normally, right? Because it suggests that, hey, the bulls tried and they literally couldn't get any higher than 41k. And so everyone started selling again, right? And all the people who bought over here would have to sell again lower, right? So that would be a more bearish scenario. So yeah, at this point, it's like short term. Yeah, sure, we can do whatever we want in the short term, but it's not really going to change the longer term picture unless we break back past some critical regions like, for example, 42.5k. That would be the first step in the right direction for the bulls. However, it simply just doesn't look super likely to me at this point in time. We could test it, who knows? But I've tried not to focus too much on the shorter term price movements because it's honestly too hard to predict, right? These structures are contradicting each other just off the bat. This was a bear flag formation. It broke to the downside, and so naturally we should be very bearish, but now we're seeing this contradiction with a bullish wedge formation forming. And it's quite clear that this is literally just to confuse market participants into, not knowing what they're meant to do, and perhaps make them buy, right? Because this is a bullish descending wedge formation, right? And if that's marketed across social media, YouTube, Twitter, all the platforms crypto influencers use, like it is being now, people could get trapped in the market. We could see a little bounce, and then it could be another dead cat bounce, right? So I wouldn't be surprised if this is just a massive trap formation and we actually are just, breaking down as usual. Really wouldn't surprise me at all. But what's interesting about this week, as I said, is we have seen a fresh weekly candle close. We also saw a fresh monthly candle close, both of which are very important that we need to be looking into in this video. The weekly candle close, basically nothing really too special happened. All we can say about it is the volume is increasing as this downtrend kind of continues. So essentially we've had 1, 2, 3, 4, 5 red candles in a row. And in the last 3 red candles, the volume has been increasing, which suggests that more and more people are selling into this downwards trend, and so it's strengthening rather than weakening, right? If you see the volume decreasing and the price going down, that means that the bulls are taking control because less and less people are selling as it goes down further and further. Okay, so the market still hasn't found the fair value for Bitcoin based on market speculation, right? There still is further down to go according to the weekly chart because we are seeing that increased volume in the downwards trend. Now we are one step closer to getting a red flip on the Gaussian channel. You can see that basically, just explaining it quickly, the Gaussian channel flips red once it starts moving downwards, right? The center line starts moving downwards. You can see how flattened out the center line is at current prices, right? Within the next 1 or 2 weeks, I would say, probably next week, this will be flattening out and we will see the Gaussian channel flip red. The only 2 other times in Bitcoin's history this has ever occurred is in or just before a 50% correction on Bitcoin. We saw that in 2014 when it flipped red, right? The price went from around 350 all the way down here, right? 57%. 2018, the same thing, it flipped red, and only a couple of weeks later, the price went all the way down 52%. If we had to follow that trend, we had 57, we had 52. Let's just say for argument's sake, we'll see, I don't know, 40, right? There's a 36% drop down to 24K, right? We could see that, you know, it's definitely possible. And that's what the weekly chart kind of suggests at this point. And supporting that is the fact that we're seeing a tightening or a squeeze on the Bollinger Bands, which we saw just before the Gaussian channel flipped red on both of those occasions I just looked into, okay? And essentially it suggests that a massive move is on the way. Now, it doesn't, you know, describe where that move will take us. It just means that it's on the way. And given the other evidence we have here, we can assume it's going to be downwards. So the weekly chart, not looking good, just progressing to the downside as normal. Probably Gaussian channel might be flipping red within a week or 2 weeks, which is bad news. Okay, so this is the monthly chart, and this is a very interesting chart, mainly because of this fresh indicator that I've never looked up before, on this channel at least, which is the 21 EMA, right? The 21 monthly EMA is a crazy strong resistance and support zone. If you just look at this chart, you can see how strong it is, right? It held for support on this occasion here, acted as resistance here, here, support, right? All the way through the bull market, support over here, resistance, support. You know, this thing is crazy, support, support, and we've actually just almost, technically, we lost it, right? Which is interesting, because the only other times we've ever lost this line, let's see, when did we lose this line convincingly in Bitcoin's price history? The only other times, all right, 2014 bear market before the drop, 2018 bear market before the drop, COVID crash. Those are the only times in Bitcoin's entire history we've lost the 21 EMA on the monthly chart. What have we done recently? Well, it's debatable, okay? But to me, that looks like we've lost it. Now, I don't know whether it will be convincing enough or a compelling enough, lost level of support for us to trigger that crash. It could be, debatably, we're holding it still. But at this point, you know, it looks as though we've slightly closed under it. At the best case scenario, we need to consider the fact that maybe we have. And at the best case scenario, at least, we need to be looking at this chart next month to see if we close under it then. Because that's not a good sign. We've only done this on 1, 2, 3 occasions before in history, all of which preceded a massive 60 to 70% correction on Bitcoin after losing it. Okay, so if we lose it this time, who knows? You know, I don't think we'll be seeing a 60 to 70% correction, but it would be a sizable correction. So that's an interesting one. We haven't looked at something like this before. And then if we're looking into the monthly candle itself, right, this is all new information here. Looking into the monthly candle itself, what we can actually see is that we didn't even have a downside wick on this monthly candle. It literally just went straight down. It went straight down in almost like an evening star formation. Almost, not necessarily, right? But what we saw is a bearish engulfing candle after a short upwards trend, which is very bearish on a monthly chart, and we can hence expect this next monthly candle to be red as well. That's just basic TA. And by the way, according to that basic TA, if that monthly candle that we're going to be seeing next is red, right, that suggests that we will be losing the 21 month EMA, and hence we'll be going downwards and making a fourth data point for losing that price point, that moving average, and hence going downwards quite rapidly. Now that we've looked into some of that new information, let's get into the base information that I look at in every video, the 4-year cycle theory. The 4-year cycle theory is a cyclical theory on Bitcoin driven by the halving that suggests that there is a pattern, a 4-year pattern between Bitcoin topping, bottoming, and where it goes, right? The pattern so far suggests that every 4 years, Bitcoin will bottom out on the 200-week SMA, although that's not crucial to the pattern. The pattern suggests that Bitcoin will have a bull market every 4 years and a bear market every 4 years, and the pattern at this point is suggesting that Bitcoin will bottom out at a 200-week SMA, wherever that may be. May not be at 24K, that's just an estimation, it might be a lot higher. It will bottom out at the 200-week SMA in November to December. In fact, at this point, I'd almost be willing to say if it was to bottom out in November to December, we can go ahead and change that number to 26K. Because I was looking at the price point this morning, I was looking at where the 200-week SMA is, and it seems unlikely that the 200-week SMA will not climb to 26K by November, December. All we need to do is draw a line here. Like, look at the correlation, look where it's going right now. Draw a straight line, mark out December and November, and you can see the minimum that's going to be at 26k. So let's go ahead and move that prediction to 26k at this point. Remember, the prediction is the 200-week SMA. It's not the price point. The price point is just an indication of where it might be at that point in time. So my prediction has always been the 200-week SMA, not 24k. That's just an estimation of where the indicator would be. So at this point, I'd say it's more likely 26k is the new target if it's going to be reached in November to December. Now, obviously, if it's reached earlier in the year, like July or something, 24k for sure. But basically, it suggests we go down to a 200-week SMA by November to December, most likely within November to December, but possibly before, and we bottom out there, and then we reach a new all-time high by November 24 to February 25, right? That's adjusted data. You might be familiar with my previous prediction on that. That is my new prediction. Okay, now getting into the May correction information, and by the way, the monthly chart we looked at kind of does suggest there's going to be a May correction due to how close we are testing this 21-month EMA. The May correction is a big part of some of my analysis in the last few months. I've been kind of looking at it since January. I do think there will be a major correction in May. I think that correction may have already started because guess what? It's May, and we've had that bear flag breakdown. But some of the evidence, just going over it quickly again, is, for example, the Gaussian channel, which we looked at. Okay, that's about to flip red. That would be doing that within May, and the only time that's ever happened in Bitcoin's history is before a massive drop. So that's one piece of evidence. Another piece of evidence would be the MACD, which we actually just deleted. Let me bring that up again. The MACD has just seen, or is going to be seeing, has just seen, sorry, a bearish MACD cross on the weekly chart, sending the histogram into the red and pushing us further down on Bitcoin. That's another piece of evidence. A third piece of evidence is the fact that every time the 50-week SMA, the red line, crosses under the 75, which is the blue line, we generally end up at the 200. That's happened once, that's happened twice, and it's happening a third time in just a week or two here. And so, yeah, that's a third piece of evidence that we might be heading downwards towards a 200-week SMA there. Moving forward, we have the 3-day chart. We can see every time we see a depth cross between the 50 and the 200 on the 3-day chart, we see shortly after a major 50% correction in about 2 months. Happened in 2014, happened in 2018, and guess what? That depth cross will be happening again on around May the 10th. So about a week from now, that depth cross will be taking place. Maybe a little bit more, depends on where these lines move in that period of time. But the depth cross will be coming. And at this point, we've already dropped below the 200, which was acting as major support. This is very interesting. I don't look at this too much, but the 200 SMA on the 3-day chart was acting as major support for Bitcoin since January. We've actually lost that recently, closed 2 consecutive candles below it, both with ascending volume. And yeah, that's not a good sign. And so when this cross happens, I can only imagine it will be propelled further downwards, right? Now, moving on to something like Ethereum. Ethereum's pretty interesting because Ethereum has actually, kind of formed a very strange structure of which I'm not really familiar with at this point. Kind of like a bear flag. I'm going to say it's a bear flag at this point, where you have the flagpole like here. You apply that to the breakout zone, you can see Ethereum is in a pretty bearish position. It's targeting 1,300, not just based off the bear flag, but based off, previous analysis I've done. I think that Ethereum will go to 1,300 at the least in the bear market, and this current structure is very confusing, so we're not going to look into that too much. Now, another thing I want to look at is the total cryptocurrency market cap, which has had a major breakdown. Let's go ahead and find that right now. The total cryptocurrency market cap, as you can see, had a major uptrending line since late 2020. So December 2020 had a major uptrending line all the way through this period here for about 2 years almost. And you can see that just recently we've closed a daily candle right below that line. We've actually come up and now it's acting as resistance on these 2 candles. And if we see a rejection here, that would be a clear breakdown and we would be sent straight towards these major July lows that I'm going to look at right here, right? Straight towards 1.21k. That's the next major support zone. I suppose you could say there is a support zone here, but even if we go down to 1.5, which is the next support zone, that's a 13% drop in the whole cryptocurrency market cap. That will decimate altcoins, bring Bitcoin down another 20%, or sorry, not 20%, 10%. And then the next major support zone is the May lows, or maybe July lows in 2021, and that would bring the whole cryptocurrency market cap down 30%, which would send us towards the bear market lows, most likely. We might even go a little bit below that. But at this point, we've broken down from major support, and that's a bearish indication for Bitcoin as well. So moving on. We've got the DXY. The DXY is essentially a chart that measures the strength of the US dollar in relation to other global currencies. And as of right now, it's testing 5-year long resistance. Some people would say this is cause for a rejection. I would disagree. Why do I disagree? because of the economic state of the United States of America. Let's look into that. We have bond yields rising massively, which means the government is essentially accepting the fact that there's way more risk in the financial markets right now than there has been in the past, and so they're raising these bond yields to reward investors for buying bonds, kind of compensating their risk for a reward. We've seen bond yields return to rates that we haven't seen since June 2019. Where were the interest rates in June 2019? Interest rates were at 2.5%, and so we get an indication that interest rates are dramatically undervalued right now, and we will be seeing massive rate hikes coming within the next few months just based on what the market is predicting. Guess what? The first rate hike is in 3 days from now. It's on Thursday, and so we will most likely be seeing a 50 basis point rate hike. Are the markets prepared for that? Let's look at the S&P 500 and try and find out. I would say they are getting prepared for it, and it will be interesting to see how the market opens today. Last time we saw those interest rate hikes, we saw a massive dump beforehand when they came out. We saw a pump. Right now we're seeing a massive dump beforehand, and when it comes out, I think we'll probably just see it go, sideways or downwards, because you can price in 25 basis points. You can't really price in 50 basis points, especially when the market is predicting, as per the bond yields, much more than 50 basis points in the next few months. So yeah, that's the reason why I'm not too concerned about the DXY facing resistance, right? Because, bond yields are skyrocketing, interest rates are going to go up. That's a natural chain of events that happens when the US dollar is gaining strength. Because in a recession, which is what we're heading into, by the way, I'll make myself more clear here. In a recession, bond yields go up. Interest rates go up, the DXY goes up. Why does the DXY go up? Because people flock into cash for safety, right? They don't want to be holding assets in the stock market. They've seen what happens in other recessions when with what happens to the stock market in other recessions, everything goes down. And at this point, Bitcoin is still correlated to the stock markets. And so the reason why Bitcoin's going down is because the traditional market's going down, because we're seeing a recession and people are flocking into cash. So I don't see why the DXY would reject here. A lot of the, perma bullish analysts on Twitter would say the DXY is going for a rejection right now and this is going to be the Bitcoin bottom. It's like, that's not really how it works. You're not looking at the macro situation. If there's a recession, the DXY will go up, and there will be, if not, there is one already, a recession. So, at this point, there's no evidence at this point to suggest that the DXY will stop going up. I think it will keep going up. Maybe not at this pace, but in the long run, it will go up, and that would lead Bitcoin to go down further, in my opinion. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian, because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box, and you will receive up to 153 USD deposited into your account as a reward. Alright, so let's get into some questions from the comment section now that we've talking about all those scenarios. We've got this guy's name, who I can't pronounce, said basically, what if the figure on the BTC dominance chart is a bear flag / triangle with a flat bottom? So I talked about yesterday in a video, and let's just bring it up briefly. I talked about yesterday in a video the BTC dominance chart as a reason why the market is bearish, because when the Bitcoin dominance chart goes up, let's go to the weekly chart quickly and we can get a better understanding. When the Bitcoin dominance chart goes up, we're generally in a bear market because people flock into Bitcoin for safety, and hence, the Bitcoin dominance in the market goes up because they're selling their altcoins for Bitcoin. And I said that this structure we're seeing right now is a bullish structure. He's basically saying, well, what if it's a bear flag? To that, I would say it's not a bear flag. And again, I'm not trying to make you look stupid here, but a lot of people do say things like this. It's not a bear flag. If we go to the daily chart, we can see that this is clearly a descending line. Hence, it's a descending channel, a descending wedge formation, which is a bullish structure. It's also a bullish structure right on top of major support that we've tested on 3 separate occasions and held on all of those occasions. And so, yeah, this is a bullish structure, and I would say it's going to go upwards, right? Even if we didn't have this bullish structure here, even if it was a bear flag, I would still suggest it goes upwards because the macro situation is more important than the TA on a chart like this, right? The macro situation is Bitcoin's in a bear market. People are getting scared of altcoins. All you need to do is look at something like Phantom. This is a massively popular altcoin that was absolutely dominating the market during the bull market. This thing has crashed down all the way down to prices we have not seen since the February 2021 highs. It's literally crashing down to bear market prices, and it will get there soon, right? So to say that, the Bitcoin dominance chart could continue going downwards. And we see an altcoin season right now is absolutely ridiculous given the state of Bitcoin. It doesn't take into account the macro situation, and I completely reject it. Thanks for the question. Love your channel, dude. Can you answer a question for me? Of course I can. How is the Bitcoin price falling while everyone is selling? However, supply on exchanges is continuing to fall. It's not adding up to me yet. Alright, so this is an interesting question that I get quite a lot. Okay, so this is my problem with on-chain data. We're on Glassnode here. This is where all the on-chain analysts or astrologers, as I like to call them, go for their charts. Look how many charts there are. We've got 40, 80, that's what, 140, 200, 260, 270, 285, 340. Let's just keep going over my head. Quick calculations. I've got like 700 to 800 charts here. You can pick any chart to make it look good, to make the price action look good, to make the on-chain look legitimate. It doesn't matter, right? You can pick any chart to pick any bias, to fit any bias. When you look at these guys' accounts, right? Like, all these people, Willy Woo, etc., these people like that, they post 15 or 16 charts, over and over and over again. They keep narrowing down on the same points for those charts, but they're kind of neglecting the other 750 charts that are on Glassnode, right? I think the thing with supply on exchanges is that's not all that matters to Bitcoin. Just because the supply on exchanges is going down doesn't mean the price needs to go up, right? And usually when you see these charts posted by these people, they zoom up so close that the supply going off the exchanges is actually very minuscule. It's just made to look very big because of how much they're zoomed in on the chart. Right, I'll try to find an example. It's quite hard to find an example, unfortunately, because I don't have Glassnode. So yeah, I suppose that's a good point in itself. I don't have Glassnode. I'm not willing to pay hundreds of dollars a year to access these what I consider astrologically driven charts. And so no one has Glassnodes. No one can cross-analyze what these people are saying, and so they just get away with it. It's like if I draw something on TradingView, everyone's got TradingView, and it's completely incorrect. Everyone who's watching the video can go and fact-check me on that. With Glassnode, you can't fact-check these people. They just get away with posting this absolute crap, to be honest with you. Like, who cares if exchange, supply on exchanges has gone down 1% in the last 6 months? What does that mean for price action? Why do we care about that? That's not a major indicator. You know what's a major indicator? The 21 EMA on the monthly chart. That's only been lost for support on 3 separate occasions and is going to be lost again for the 4th occasion. The only times we've ever seen this being lost, we've dropped 60% on Bitcoin for a couple of months. That's a major indicator. I don't care about balances on exchanges because there's so many different explanations for that. I could personally give you 10 reasons as to why that could be happening, right? And maybe 5 of them are bullish, 5 of them are bearish, and then we can end up in the same place we started. Who cares? We need to look at the charts, the data. The charts don't lie. The data is very, very subjective. That's the problem with on-chain. It's very, very subjective. Next question. And I know what you're asking, by the way. How is the price falling when the supply and exchanges continue to fall? I know exactly what you're asking. I don't have the answer to that question. Why do we care? It's happening, right? And it's happened before. It happened in 2018. It happened in 2015. They don't show you those charts though, don't they? They don't show you those charts. They show you the charts. They cut it off just at the right amount of time so it looks like every time it goes down, the price goes up, and they're acting like this is an anomaly, right? They're doing that so they can feel like, they've been right the whole time. The charts are wrong, and it's not their fault that they've misled you to buying Bitcoins in 69k. It's actually just ridiculous. I don't like people who do on-chain. I don't have anything against them, obviously, but I think it's very misleading. It's very subjective, and it's not something you should actually consider too much when deciding whether you should buy or sell, right? Unless you know how to use it perfectly, which obviously some people do, but they don't display that. Now, DJ Bravo says, and this is a good question. Monthly stochastic RSI is more oversold than March 2020 during the COVID crash. How can you justify this? The subs 30 claims, etc. So he's basically saying the monthly stochastic RSI is very oversold. How can you justify your bearish opinion given this information? Okay, so let's look at that. So I couldn't actually answer this question in any better way than just bringing up the monthly RSI, right? The monthly stochastic RSI. What we can see is that up here in 2014, when Bitcoin was still a massive 66% correction away from bottoming out, the stochastic RSI was as oversold as it was when it bottomed out in 2018, when Bitcoin was all the way up at 6k, a massive 57% away from bottoming out. It was as oversold as it was when it bottomed out, and it stayed in those regions, by the way, for like a year and a half on both those occasions. And on this occasion, Bitcoin has just reached a low on the stochastic RSI, and there's no indication that it will be bottoming out anytime soon. So why, to answer your question, the stochastic RSI is not a good indicator to use to predict immediate bottoms. It's used to predict kind of general trends and bottoms. Now, as you can see as well, the stochastic RSI topped out in December 15 at 400 USD, and it remained topped out throughout the entirety of the 2017 bull market until 2018 when we reached 20K. Right, so clearly on the monthly chart, this is really not something we should be using to predict any kind of top or bottom because it's very, very, very inaccurate. So that answers your question there. Okay, let's do the Twitter segment now. And we've got a couple charts on Twitter that I like to look at. Now, the first chart is kind of further enforcing that opinion I had on the monthly chart there for 21 EMA. We have basically this guy saying on Twitter, who, shout out to him by the way, saying basically COVID crash 2020, 6K floor back in 2018, and the 2014 bear was the only times we ever saw the 21 EMA lose for support on monthly. Completely agree with that. That's actually where I got the opinion from. Not the opinion, the chart from. He showed me that, and I looked at the chart myself, and I'm like, oh, he's right. So good on him for that. Quick shout out there. And then BTC fuel. So this is a little warning flag for people who are, easily, manipulated to do things they probably shouldn't be doing in the market. You get people like BTC fuel, who constantly posts, absolute hopium at this point, and brings up the RSI, which, as we all know, is very unpredictable, especially on something like the total cryptocurrency market cap chart. Doesn't really mean anything, and a random, messily created triangle on two occasions, and he's trying to make a correlation here. He's basically saying, well, look what happened last time, that should happen then this time because it happened last time, but he's only got one data point. So at this point, it's just a coincidence. It's not actually a trend. In order for something to be a trend, you need 3 data points. He's got 1 data point here. And so that doesn't really mean anything to me, but to someone who's not experienced in statistical analysis, they could think that, hey, that's a clear trend, and hence we got to get into the market because it's about to go up, right? And all this is doing is just trapping people. And honestly, you shouldn't even give these people the time of the day because what they post is just completely ridiculous. If you consider this technical analysis, I don't know what to say to you. But anyway, thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers. Before we get into today's video, I want to talk about Become a Trader, a 10-unit course from the Crypto Academy. Now, myself and Megawell Crypto have created the Crypto Academy to teach traders how to trade, or aspiring traders how to trade. So if you want to learn how to trade, this is the course for you. We've got 10 units going from market patterns, technical indicators, market psychology, candlestick patterns, etc. You can chuck us an email at thecryptoacademycourses@gmail.com, this email right here. Check out the website link in the description below to get that email address, or to look at the website and find out more about it. Cheers.